An anniversary passed this weekend without too much fuss. Maybe we all want to forget what happened 4 years ago. That's when Lehman Brothers collapsed. Now, banking regulation is a thorny issue, and an issue which I discussed with Professor Charles Goodhart, a former MPC member here at the Bank of England and now a professor at the London School of Economics. So where should the debate be surrounding banks at the moment? Should it be around banker pay? Should it be around oversight? Should it be around the oversight of banks, or is there really no burning issue which needs to be sorted out at the moment?
Well, I think all the issues are very much ongoing. None of them have been fully sorted out. The whole question of the incentives for bankers and the fact that they get paid such huge amounts frequently after not having put in very stellar results. That all remains to be sorted out. The whole issue of the best ways to regulate banks remains under debate and under discussion and under consideration, and is still going forward. And the banking industry itself is in difficulties. It's thinning down, it's delevering, and at a time when this is actually making the economies of Europe worse rather than better. So there are a whole series of issues, none of which have been fully resolved.
But the issue about banker pay, isn't it a case that the market speaks? If the banks want to pay their employees well, surely that's their decision. Why should politicians have a say in that?
It's partly the issue of incentives, I think. It's partly the question of trying to ensure that the structure of pay is such that the bankers don't benefit, irrespective of what happens. And that when banks take on risks, that if the risks have been misinterpreted and got wrong, that the bankers suffer sufficient pain that they not go on sort of just happily taking those risks. It's not, I think, the high pay as such when they're successful. It's the fact that there doesn't seem to be any equivalent penalty on the downside that, in my view, has really upset people.
Let's talk about the size of banks. The head of JP Morgan, Jamie Dimon, he's been saying that they get great benefits from being such a large bank. Do you think that there needs to be an issue addressed in terms of the size of banks? Should they be made smaller, or should they be allowed to expand?
Well, again, when you talk about being too big relative to what? And is it too big relative to the size of the state in which you're operating? Which means that no bank in Luxembourg should be bigger than a tiddler. No bank in a middle-sized country such as the UK should be bigger than a middle-sized bank. And that the only big banks in the world should be in China and the United States because they're the biggest economies. That doesn't seem to me to be entirely sensible. The question that one wants to have is size in relationship to what? And I think the concern is not so much size as such, but that banks may become too complex and covering too many different areas of business for their senior management really to comprehend and maintain control over what is happening, and indeed for the executive board and the non-executives more widely. I take, for example, the case of AIG, which was brought down by a small group operating well away from the US, actually here in London. And I think it's arguable how much senior management and the executive board actually knew about the operations of that particular group.
So there has been a number of scandals recently in the UK, Standard Chartered, the Libor rate and Barclays. Are these indications that there needs to be more regulation of banks, or is it just the case that there's such scrutiny of banks at the moment in the press that they come to the front page much more easily?
don't think that it's specific to the UK. I mean, there have been a lot of scandals in banks sort of everywhere you look. But if you live in the UK, you're obviously sort of brought to face to face with UK particular scandals. And yes, I think that there have been rather more in this last year, certainly more than is comfortable. But it's partly the fact that when an industry has come into difficulties, it's like the saying goes, when the tide goes out, you will see who's bathing without their pants on.
Banks seem to be reluctant to lend to businesses and to homes. Do you think that banks can play a bigger role and should play a bigger role in getting the world economy back on its feet?
Well, the banks have got objectives of their own, and after all, they're profit-maximising entities. They're part of the capitalist system, and they're supposed to be maximising profits on behalf of their shareholders. They're under very considerable pressure. The people who want to borrow from them are doing so in the middle of what is quite a severe recession, and therefore the borrower's probability of default is higher. So rather naturally, the banks are putting on tougher terms for borrowing, collateral terms, higher margins and so on, and also trying to rebuild their own profits at a time when they pretty much have to in order to meet the regulatory requirements, and that means that the spreads are going up, so that the rates they're charging borrowers are tougher. And the banks claim, of course, that everyone who can meet their terms and is sufficiently creditworthy, they're prepared to lend to. Well, the potential borrowers claim that the terms have been made so onerous that they can't consider borrowing in the first place.
That's all for now, but catch the second part of this interview where we're discussing who will take over at the Bank of England, which is behind me, as its governor after Mervyn King steps down after 10 years in charge. Goodbye for now.